They will. Okay, we are live. Well, welcome everybody who's watching this. You got Tino and I to kick this thing off.
Yeah.
And this is a topic. How we became friends around this topic. Like
Right.
I met you and Phil around this. We have been talking about forbearance and the impact that forbearance is going to have on homeowners, because quite frankly, what was it? It was something like 5 million homeowners went into forbearance in a 90-day period.
That's correct.
And there was zero criteria for going into forbearance.
Yeah.
And the message was delivered in such a way that, I mean, a lot of people started to go into forbearance and they decided, well, maybe I don't want to not make my payments because I can. But the way that the message was delivered, it was really, hey, COVID, so you don't have to make your payments. And
Right.
Nobody's going to ask any questions. So you've got a certain percentage of people that absolutely need it. You have a certain percentage of people that are not sure if they're going to need it, but they're going to do it as a safety net. And then you've got a group of people that are obviously going to take advantage of the situation, of the fact that they don't have to make their payments and they could totally afford it. So as of today, about, what is it, 60%? So there's a little less than 2 million people that are still in forbearance.
Right.
And the CFPB finalized the rules that your mortgage servicer must follow in order to get you out of forbearance, primarily with the goal of preserving home ownership.
Right.
Right. So
that's the idea.
That's the idea, and most of the rules are flexibilities on current rules to allow more flexibility around getting you out of forbearance and getting you into a position where you can do something with the past due payment and start making regular payments. So if anybody else joins us, we will bring them in. If not, Tino and I are going to kind of go through on a high level some of the most important rules that I think are going to make the biggest impact on people.
Well, Phil I know he's trying to get in, and he's having a little bit of an issue, but I kept telling him, try again. We're on, so let's see how that goes.
We know the link works. All right. So what we're going to talk about, what we're going to start with this first section is really everything that was impacted by the CARES Act. And the CARES Act applies to anybody that has a government-backed, insured, or guaranteed mortgage. So that's all of your Fannie Mae conventional mortgages, Freddie Mac, FHA, VA, and USDA. So if you have FHA, VA, or USDA mortgage, you probably know that. Whether your loan is owned by Fannie Mae or Freddie Mac, you may not know that. There are lookup links, and we don't have that link, but we have a website called forbearancereport.org. I don't have that on here, but you can just type in Fannie Mae lookup tool or Freddie Mac lookup tool to see if your mortgage is owned by by Fannie Mae or Freddie Mac. So this is one of the tough ones, Tino, right?
Let Phil in. Allow Phil to get in.
He's not in yet. I don't see him underneath. All right, I'll tell you what we'll do. Let me see if I can. Oops, we don't want that. Okay, Tino, do you want to address this? Let me see if I can make sure that Phil has the right.
Sure. Well, so the definition of a COVID-related hardship, literally in quotes, it's a financial hardship due directly or indirectly to the national emergency of COVID-19. And that thing was declared in the proclamation on March 13. It's dated back to March 1st, and it's continued through to February 24th, 2021. So if you've been affected in any way, directly or indirectly, that a hardship, are not able to make your payments, then this rule, which has now become the final rule, it has the same effect as the laws or the rules that affect servicers. Okay, they must follow this. Anyone that's been affected by directly or indirectly because of the COVID situation between those dates is now applicable under this rule. And there are certain things that are being asked of the servicers to do because a person falls under a hardship or a difficult situation because of this.
Well, and one of the challenges that I think we all had with this is how vague it is, a financial hardship due directly or indirectly. Like, how do you prove that, right? So
Yep.
what are they going to ask for? We don't really know that yet, right?
That's correct.
That's one of the challenges that we have. Okay, there's Phil. And this was, all right, sorry about that, Phil.
Hey, Phil.
That was partially my fault for not updating the link.
No worries.
So this is really important, and this is definitely something that early intervention live contact requirements. This is really important because this is something that really kind of hit us also after 2008. Man, I'm getting some real feedback from somebody. And really what this is this requires the servicer to have a live conversation with you before they are allowed to start the foreclosure process. Right?
Yes. And with the they got to have a live conversation, or the person, I think we got slides to that effect, right? They've either got, we're missing our buddy here. So they either have a live conversation with you, or, okay, the property has to be considered to have been abandoned as it applies for the local state rule, local law or state rules, or the borrower has been unresponsive. Basically, they've not been able to contact the borrower, meaning that the servicer did not receive any borrower communication for at least 90 days before they would have started any foreclosure referral or anything against the borrower. So the early intervention contact they must contact the person, with the exception of those two things. Number one, again, is that under the local laws, your state laws, your local laws, and your municipality, you can be declared as being abandoning your property. Or number two, you've not made any contact with the servicer whatsoever for 90 days prior to them being able to file any action against you. So if those three things have not occurred, they've either made direct contact with you and talked to you, or it's abandoned, or you've not responded to any of the requests from the servicer for 90 days, they haven't heard from you, then in a sense they can file action to foreclose on your property.
Which, and I think I addressed this a little bit later in a different slide, but it's worth bringing up now. You cannot go dark on your servicer.
Yep.
All they're required to do is prove that they attempted to contact you, and that will be good enough for them. If you ignore them, they can. Once they meet certain criteria and they can prove that they made an effort to try to contact you and talk about your options, they can initiate the foreclosure process. And that's another thing that I kind of want to talk about here is, so the reason we're talking about this is because you have to come out of forbearance. 2 million of you have to come out of forbearance. Something has to happen. Foreclosure, for the overwhelming majority of homeowners out there, is not an option. It's only an option if you have unrealistic expectations. If you, I I don't know how to phrase this exactly, but most people in America have equity right now.
Right.
And you may very well have to sell your home, and you should consider selling your home before getting a notice of default or before getting foreclosure actions, because if you let it escalate that far and you let them get that mark, that's going to destroy your credit, and it's going to postpone the amount of time that it's going to take for you to be able to be eligible to buy a new home. If you can't, if your servicer is not working with you, and we have a lot of feedback from servicers that are not, consumers aren't able to meet what the servicer is requiring of them, do not let them foreclose on your home. Sell that home, take your equity, wait this thing out for a few months, and then go back into the market and buy a new home. You should not be impacted by the fact that you were in forbearance and that you had a COVID-19 hardship. It's going to be easier to explain that when you apply for a new loan than if you have a foreclosure, and then it's going to be years until you can get back, then you can get back into the process.
And that is an excellent point. And people sometimes out of fear, most of the times out of fear, they're just not responding whatsoever.
Yes.
You have your options open right now. You're in the best of times. This is a market where you can easily sell a home in today's market. You can take that option.
Probably worth.
It's yeah, and it's going to be worth a lot right now. Okay.
Mm-hmm.
So you have the ability to work this out. You may be displaced for a year or two as you're renting, but the fact is you're going to be able to get back into home ownership much, much quicker than if you postpone this thing, keep evading it, and find that your servicer has initiated a foreclosure action against you. It's a lot more difficult after that. You have to wait a much longer time to get back into home ownership. So
take the money and run is a good policy right now.
Right.
If you think so. I guess this feeds directly into what we were talking about. So one of these criteria must be met before the servicer can foreclose on you.
Right.
Which means that they have to, first of all, they have to contact you. They have to evaluate a complete loss mitigation application. We still don't know what that means exactly. That I haven't seen that specifically defined, but it probably is somewhat defined for the servicers on what that looks like. If you abandon the property, then they can foreclose. And then if you're unresponsive, so if this is what we were just talking about, if they didn't hear from you in that 90-day period, and they can prove that they attempted to contact you and you just didn't respond, that gives them the ability to file the foreclosure.
So it's really important that you document that you have reached out and either spoken or communicated with them in writing. You need to make sure you document that.
Yeah.
Because if you don't document that, your word is not good enough. And showing I sent an email is not enough, my friends. Make sure you find a third party that can document that you have made the effort to reach out and discuss the issue with the servicer, specifically about your loan and the circumstances that you find yourself in.
Now, Tino, do you know if part of this process requires the servicer to provide written notification? So if your servicer contacts you, I'm a homeowner, can I ask the servicer to provide me something in writing about our conversation, or what is a best practice for that? Because you're 100% right. You need to protect yourself, and don't count on the fact that the servicer is going to be remember that they're not going to document that they talk to you. They can make mistakes.
So guess what? In worst case situation, you're asking for the stuff and you may not get it from someone, either because they had problems sending it out or they forgot it, whatever. For whatever reason, you don't receive that. You want to keep yourself safe and be able to document that by utilizing third party. In other words, using the mail, using FedEx, whatever you need to use that can document that says, I had this conversation with this person on this date and time. These are the issues we discussed. And you have and you're referring to specifics about the situation that you discussed. that cannot, in a sense, be altered. You're referring to specifics about your situation. That way, you're definitely safe. Now, if indeed the servicer can reach out to you and send you an email or actual, snail mail over the Uncle Sam, and documents what your conversation was, terrific. You're doing just fine. But in the event that does not occur, you want to make sure you document yourself. So you have to be proactive about this. You need to be proactive because human error exists, or you can, at worst, I'm not going to assume maliciousness on the part of the servicer, but errors happen. And because if errors happen, you might get hurt. You need to document your situation.
And that's such an important point, because the servicers have had this thrown on them also.
Yes.
So they all of a sudden have millions of people that aren't making mortgage payments. Their systems are not set up to track and manage all of this stuff. It's outside of the box for them. Did you have something, Phil?
Yeah, just wanted to maybe make a point here, maybe backing up a couple of steps. For those people that are, sometimes we use language that we hope everyone understands, but, there are so many people in America that started out, got a loan from a mortgage broker. That mortgage broker may have sold the loan to a mortgage banker. That mortgage banker may have put it in a security or sold the loan, or, the servicer that we're talking about here is the entity that today has responsibility to collect your payments, your principal and interest, and administers your loan on behalf of someone that may own your loan. It may be the company that made you the loan. It might not be. And if all of that is confusing for you, let me just give you one point of advice. I think Scott and Tino were both very careful to say, that you can't take this for granted. You must be proactive at making a step to protect your own intervention. And one easy way to do that, if everything else, if you don't have a relationship with the entity, the mortgage servicing entity that's supposed to be collecting your payments and managing your situation, especially if you're in a distressed loan situation, then reach out to one of your local HUD approved housing counseling organizations, and they will become the third party documentation entity that can validate, verify everything that you're attempting to do. And there is a lot of documentation that has to flow back and forth, but please don't be afraid to reach out to one of the Department of Housing and Urban Development local housing counseling organizations. They can be a really strong source of intervention on your behalf and third-party documentation service. So
that's an excellent point. Excellent point, Phil. That's dead on. And also, people who may not be facile, may not have the language skills, because they speak either Spanish or an Asian language and are not facile with communicating. Definitely reaching out to one of those HUD agencies would be a tremendous help. Not only for you to relate clearly what your situation is, but to also understand the circumstances that you find yourself, and have a third party that, in a sense, can advocate for you, provide your case to the servicer. Okay, so really, really important what Phil talked about. That's dead on.
Absolutely. All right, we're almost to the end of this. So actually, you know what? Let me go back to here real quick, because there's one more thing I wanted to address. We saw a lot of this. So Josh and I own a mortgage brokerage, and we specialized in helping people buy after bankruptcy, foreclosure, and short sale after the crash. What we saw over and over and over again is folks realized that they weren't going to keep their home, so they filed bankruptcy, and they included the mortgage in the bankruptcy. And the assumption from a lot of people, and I think they were being misled or misinformed by the bankruptcy attorneys, is that you still own the home. And so they would file it in bankruptcy. They figured, oh, I put included in bankruptcy. I don't own the home anymore. And they left. Again, you probably have equity in your home. There's under no circumstances should, even if you file bankruptcy, you still own the home and still foreclose. And in some situations that could prevent you, well, in all situations, it's going to prevent you from buying again in years. But in some situations, it could be many years. So for instance, like a conventional loan, the foreclosure doesn't really impact you if you included it in bankruptcy, but you're not going to get a FHA loan if you have that foreclosure on there. There's a separate waiting period for that. So again, just trying to put myself in the shoes of people that might be in this situation. If you file bankruptcy, if that's your exit strategy because you have other bills and other debts and you know you're not going to be able to keep the home, you still own the home and you're still responsible for the mortgage. If you don't pay the mortgage, they will foreclose. And while the foreclosure may not show up on your credit, the bankruptcy will, and it could just cause a lot of problems in the future. So those are really the most important things. So if you have a loan that falls under the CARES Act, Phil, you were spot on. A HUD counseling agency, don't be afraid to engage that. It's free to consumers. Phil, will they contact your servicer with you? Will they facilitate that communication?
Yes.
Okay.
Yes.
And how do people find that? HUD is HUD, stands for Housing and Urban Development, HUD Counseling Center.
Right. And when you go on the HUD website, they have a list of every approved housing counseling organization. It's fairly easy to find. And to Scott's point and Tino's point before, we're talking about anyone that's in a distressed loan situation. It doesn't necessarily only have to be people in forbearance and covered in the CARES Act. For goodness sakes, I know it's a difficult situation. I know it's traumatic. It's, people are, it's scary. But the worst thing is to not take the initiative to reach out to your mortgage servicing entity, that company that's supposed to collect your payments. Please reach out to them and do your best or contact an approved HUD-approved housing counseling agency to act as your intermediary if you don't want to do it yourself. But the worst thing, especially in this environment, is to lose that hard-earned equity that you've generated from your, making those payments and living in your home and keeping it up, etc. for all these years. Don't let a bad situation get worse.
Right. Just
take the step to take the outreach. It's uncomfortable. We know that, but it's also the prudent thing to do, and it's the way you can protect your family. So
many folks may feel embarrassed that they find themselves in that situation. And it's a situation that you may have been brought to not because of circumstances that you put yourself in, but it overcame you. Don't let your embarrassment keep you from reaching out and finding help, because it's a hard equity, like Phil said, and you don't want to give that up, and you don't want to give up your chances of returning to home ownership as quickly as possible because you haven't reached out for help. There's lots of good agencies out there, HUD certified, that can help you in this process, and you should reach out, take advantage of that to protect your interests and protect your equity.
Well, and another part of that also is when you leverage those resources, you can find out whether or not you can save your home faster.
Yes.
So when you engage with these counseling agencies, and we're going to talk about another tool that we recommend, because it's very difficult. The biggest complaint that we got on forbearancereport.org is that consumers could not contact the servicer. So when you contact that servicer, you need to be as prepared as possible to get as much done, because that's what we saw a lot of that after the crash of 2008 is there was multiple phone calls. They couldn't get through. The person they were talking to got fired, or they left, and so they had to talk to somebody else, and they had to start over.
Yes.
All of that just delays, postpones, and pushes all of this stuff out. So this is really kind of, I know it's painful, but ripping the Band-Aid off fast, engaging with the free counseling services, engaging with having that communication and that conversation with your servicer, finding out what your options are, what they're willing to do, and determining whether or not you can meet that criteria to save your home or what your next option is.
Right.
All of that is really important.
And dear friends, realize that some of these agencies have a back door. They have a telephone that's just for them, that they can reach out to many of these large servicers, that it has been difficult for you to reach them, but they have an access through the back door and can do that easier than you can, directly to the people that deal with these kinds of issues. So, listen to what Scott says. Listen to what Phil is talking about. Make sure you reach out to these agencies for help.
So this last slide is something that Eric sent me. I was hoping that he would be able to make this call. He's spent a lot of time and put in a lot of effort contacting the housing finance agencies, because the loans that were covered under the CARES Act is approximately 70% of all of the mortgages out there. There are a lot of folks, and those are the ones that we're seeing the biggest problems with, that are not following the CARES Act because the loan is not government backed. So these servicers are just, they are not working with homeowners the way that you would hope that they would. But money has been sent to the state. 6.9 billion, I think, has already been allocated. Is that accurate, Phil? You would know these numbers better than I would. But the states have had billions of dollars distributed to them in order to create assistance programs to help homeowners stay in their home. The challenge with that is there's a lot of moving parts. Once it goes to the state, sometimes it can be a black hole. The housing finance agencies can't have to put together the programs. So what Eric really wanted to express here is that if your loan is not covered by the CARES Act, you're not completely out of luck. Contact your state housing finance agency. I think, Phil, does every single state have a housing finance agency?
Yes. Okay. It might not be. It may be called the state housing development agency, but all of them have a state housing finance agency. And by the way, while the states actually got there's a little more than 6.1 billion allocated to the states for helping people sustain their homes. But the 19,000 cities of America also received funding for this. So again, if you don't know where to contact, if you contact your HUD-approved housing counseling agency, they'll be able to direct you either to the state agency or to the city housing development program or some functional method of, that's what the stimulus, the $1.9 trillion stimulus package included in it. That's what the CARES Act was about. There's an upcoming infrastructure bill. All of these are going to have substantial amounts of money available for people to receive some form of assistance to help you in your housing sustainability.
And that assistance may be in the form of either a loan or a grant to pay back the forbearance amount so that you can bring your account current and start making your regular payments moving forward. Because that's what I'm seeing. That's most of the feedback I'm seeing from servicers that aren't covered under the CARES Act is they're just saying, pay it all up front. If you don't pay it, we're going to take your house. And so your alternative, if your servicer is telling you that, now, if you're getting that message, make sure that your loan is not covered by the CARES Act. If it is, that's illegal for them to require that. Part of the CARES Act is a servicer is not allowed to require you to make all of those payments up front. They're required to come up with some sort of, give you some other alternatives. They cannot only give you that option.
And to be covered by the CARES Act, what's required? What is required?
It has to be government backed or owned. So Fannie Mae lookup tool, Freddie Mac lookup tool, FHA loan, VA loan, USDA loan. Those are all covered, and it's the majority of the loans out there.
Yes.
But there are also an awful lot that are not. So this last tool that we'd like to leave you with, so part of this is that part of the requirement of the servicer is that they have to collect a loss mitigation package, and they have to review that loss mitigation package. That loss mitigation package is probably going to require, they're going to look at your credit, they're probably going to look at your income, they're going to look at your assets. We have a tool, Brian View, who's not here today. He works for a company called FinLocker, and this is what they do. This is free to consumers. So anybody that goes to freefinanciallocker.com, this is a free tool that allows you to connect your financial assets to it. It allows you, it's primarily designed to help budgeting and to monitor your credit. There's free credit monitoring, but to help you get into a position to buy a home. But they also have features in there specifically for forbearance. And what this allows you to do, again, if you contact your servicer, the last thing you want is to get a long list of things that you need to gather and collect and scan, and then try to get back in touch with your servicer, back in touch with that same person, and deliver that documentation for them. This is an opportunity to have all of that information in one place that you can transfer to them digitally, that they can review and hopefully cut down on your touches, and be more prepared for that conversation when you're on the phone with that servicer. So this is something that's free for consumers. You can go to freefinanciallocker.com. There is a pretty, there's a few steps to the process. It will give you access to a Vantage Store, to your credit score. And it's an unbelievably good tool for financial management, budgeting, planning, and just organizing all of your financial assets and your financial life into a single app that you have access to, and that you can give permission. This is, again, and Brian would explain this better, and maybe Phil, you can explain it. This is giving the consumer permission. It's permission-based financial access. So the consumer can give permission to all of this information, give this to the servicers if they want, apply for a loan. They can transfer it to Josh. Josh will have everything he needs to do an application, that kind of thing. So that's a tool that we put together that we'd like to offer people. It's 100% free. It always will be moving forward, and it should help some. It should help some people with their conversations and their communications. Would you add anything to that, Phil?
I might just say that this is a very useful tool for anyone that's in a loan in distress situation. This information is going to be asked for by your servicer to find a soft landing for you. So it's a very useful tool, but it's also a very useful tool for anyone that is looking to become a homeowner. All of this the tool itself is a extraordinary tool to help prepare people for homeownership, to improve their financial acumen, or to help them find a soft landing from their difficult situation. So don't be afraid to jump in there and utilize it. It's free. There's no, and it's safe and it's secure.
It's secure. The data is not sold or shared. This isn't like Credit Karma or anything like that you start getting credit card offers from people.
Right.
This is secure. Another part of this, Phil, that I almost forgot. I'm glad that I just remembered this, but I remember this because I actually got an email this morning from Forbearance Report. People's credit is being impacted. Servicers are reporting on credit, and they're not supposed to be. So part of your free financial locker is it monitors your credit for you. So if they put a negative mark on your credit and your score drops, you'll be alerted immediately, and you can address that because it's probably a mistake, and you can go back to the servicer and fix it. But if you don't know that it's being reported on your credit, and and months go by, potentially you try to apply for an auto loan because you need a new car, and they turn you down because you have mortgage lates. You could have headed that off. You could have gotten in front of that, because
Right.
there are a lot of servicers that are reporting lates, and they're not supposed to be doing that.
Right.
And might also just mention, Scott, that the free financial locker, the Fin Locker itself, there are about 150 tutorials in this locker that help explain some of the difficult things that the vernacular, the language used in mortgage finance and in mortgage servicing. Sometimes it's difficult to understand. These tutorials will help with that as well.
Super valuable free tool. So that's it, gentlemen. Thank you so much for joining us here. I apologize for the confusion on the links, but these are some of the things, and we have some really important topics coming up in the next few weeks. There's a lot of activity out there around affordable home ownership, and not everybody agrees on what affordable home ownership means or looks like. And we have some very strong opinions on what it should look like. And we need your voice to help us to fight back against some of these things that may not help as many people as we would like to see it help. I never like to attribute to malice that is just ignorance. And I think a lot of this stuff, the politicians, I don't think they're trying to do anything bad, but I think that in an effort to be inclusive, they're excluding a lot of people. And we need to be able to have a voice that we can go to these politicians and these policymakers and say, hey, listen, me and my 5 million friends don't agree with your interpretation of affordable home ownership. And we'd like you to make some changes to what you just put out. And we can get those changes done. I would like to think that AHA had some influence or impact on Fannie Mae reversing the 50 basis points refinance fee last week. And we can do those things. We can make those changes. We can affect those changes, and we can make an impact on these policies if you join us in this fight. So myaha.com/join, free lifetime membership. You will get an email from Phil probably once a month telling you the state of home ownership and where we need your voice and how you can help. Also on myaha.com, there is a tool there if you don't know who your servicer is. Is that right, Phil? Could you talk about the servicer tool?
Yes. On the website, we have a connection to the top 50 servicers, but there's also a connection if you want to find your servicer. You just click on it. You can find the person that services your mortgage. And back to what Scott was mentioning before, we rarely take pound our chest and declare victory, but this is one where we must declare victory on behalf of the consumer, the homeowner of America. We work really hard to stop the government agencies from imposing this extra out of the blue 50 basis point penalty for anybody that wanted to refinance their home. It's about 0.25% in rate that people would have paid more to be able to refinance their home. And frankly, it was just a way for these government agencies to generate $9 billion of excess income by stripping away equity from people's homes. And we got it reversed. The decision was just made last week, and it was a big victory for the homeowner of America. That's what your voice can do. Without your voice, we just simply can't. We can't make these. We can't be impactful without your voice. So thank you very much.
Yes, and so
Thank you, Greg. It looks like Greg joined. Thank you.
Let me encourage you folks to join the AHA. It's a free lifetime membership. We are not going to hound you with marketing calls. There's no credit cards required. We do not sell your information to anyone. What we need you is to join. We need you to add your voice to us so that more voices can, in a sense, fight for you and fight for all to make sure we protect and promote sustainable home ownership for everyone in America. And so make sure you join. It's free. Go to myaha.com/join, click on that red starburst, and it'll be really very, very simple. And it's a lifetime membership.
Fantastic. Well, thank you, gentlemen. Thank you, everybody who sees this and who helps us and joins this fight. We've got more good stuff coming up for you moving forward. There's a lot of changes around homeownership, a lot of new policy that we're going to be discussing. And thanks again, everybody. We will see you next time.
Thank you.
Matt.
Take care, guys.
Thank you, Josh.